Morning, guys. Morning.
Hey, Jay, how's it going?
It's getting started over here. It's getting empty like usual. So soon I might just end up doing only webinars. But I still like to meet in person. It's we'll figure something out. Maybe eventually I'll move these meetups over to like Cupertino or something. And then start putting out signs on like weekends like real estate agents.
Move it to Redwood City, Jay. Just kidding.
Say again? Let's see. All right, so markets are looking significantly better, guys. Pretty bullish now. Like I said, 270 was the dollar point that I was looking at for the S&P 500, and we are above that. We broke above that, and yeah, let's see where we go from here. Everything else looks pretty good too. But let me just pull it up. Bam, SPY. Yeah, so today we're going to talk heavily about stocks. Since this is sort of like so for me personally, I wait until the markets kind of determine a direction, and then I start going really hard on the stocks. It looks like we might get back to it again, but time will tell. As of right now, this is what the S&P 500 looks like, right above the 270 that I mentioned. Pulling up JC's weekly style. What's your opinion, JC? I think by your parameters, it's looking pretty good for the weekly.
Yeah, well, basically, I was thinking on the weekly is I expected a retrace from back to the 20 MA, and that's exactly what we got. So now it's going to be just the most crucial point. Are we going to get through that 20 MA, or we're going to start to go lower again next week? So we're right at the crucial point, which is the 20 MA. Yeah.
So for me, when I trade, this to me is a weekly close above the 20 MA. So I view that as like a nice close above. Like for me to determine it objectively, right? I want to see that one corner of the candle close above whatever 20 MA, right? And it's also above 270. So to me, this is where I start to shift my opinion and really look to bet that direction. So the next thing I like to see. Yeah.
I was going to say, for me, basically, if the candle is still, leaning anywhere in between the 20 MA, it's still there. So next week, what's going to happen? The new candle is going to begin above 20 MA.
Yeah.
So it needs to stay above it and make a new candle above. Because if it starts going lower again, it starts touching the 20 MA again during the week, then we're still in the same scenario. So I just see it as a whole entire candle thing has to be completely over.
Yeah.
So like,
yeah, I'm pretty much in agreement. So now that it's above the 270, it also acts as my support, right? So what I want to see next is something like this. And then the next test is definitely 280. But this is a lot more bullish than when it was down here at 260. I'll tell you that.
Right.
So I'm liking the markets right now. Other things that I'm looking at for confirmation, though I don't want to start too soon unless I have one more person come in and sit in here with me. This is it's pretty lonely these days. Seeing that everyone's online now. Okay. But I still want to run these clubs just because it's definitely a great session for me to improve myself as well as to. I mean, to learn something is one thing, right? But to teach it is a whole nother level, in my opinion. And then it's also more fun when you're doing this in a social manner versus like all by yourself. But anyways, let's analyze a little bit more S&P 500, and then we'll go around the world, and then we'll look really deep into the indices in just a second. So let's see, where should I start before someone comes in? Let's see who's online. Well, I hope you guys are all doing well. Ang, I don't think we've met yet. Neo Steve, hope you're doing well, man. Steve, I think that's Steve PI, right? I hope you guys are doing well. It's been a while. Okay, hello, man. Awesome, awesome. Okay, so let's do it. Hey, Steve.
Hey, Kay.
Hey.
Yes, I've been just joining the webinar thing.
Okay.
But are you the only person in the room there?
Yeah, I currently am. The library.
You know what? I'll start coming in.
Hey, no worries, man. I don't like to pressure anyone to do anything. It's just the library kind of pressured me to have at least 4 people in the room, or else they don't really want to see.
Yeah. Okay, I'll try to make it make sense anyway.
Hey, no worries, no pressure, okay? If you take a poll prior to each week as to where to hold it, it'd give you a better idea who can show up. I'd definitely make it, yeah. So I am looking at the Cupertino location as to be the next serious spot. Reason being is I'm working on my real estate license. It just seems at this point, I have some people who want to drag me into real estate to help them get some deals, source some deals, right? Because I have the sales background. And so I'm looking to join like the Keller Williams office. And in that office, they actually have a really nice spot. Let me see if I could find it. Maybe I could host it there and then literally put signs out around Cupertino, let's see, to get people to join physically. At least that way, you know, it'd be a little bit cooler, but this is what the room would look like if I do it in Cupertino. Yeah, this would be really cool. And then if I get more money, let's say if I make more money and eventually get my own place, then we could start like a little venture capital incubator. That'd be really cool. But I mean, I'm still young. I gotta go out there and network with a lot of people and just keep it coming. But I think this would be like a really cool next step if I could get this room every Sunday. And we'll see from there. Maybe we might even change it to like every evenings. So, because I did have experience running a meetup in the evening time, and there's a lot more people that come to the evening sessions than these Sunday morning sessions. I don't know what people do on Sunday mornings. They're probably still sleeping, but I'm definitely up at like 6 a.m. every Sunday. So, yeah, I might shift the time around. So if you guys have any time preferences, let me know. So, I think I might just have to run with this one today, alone in the room. So not a problem. Let's do this. So today I want to talk about share buybacks, but before I begin, I like to look around the world just to see what's going on. Prefer Sunday morning time is good. Yeah, we'll see how this evolves. I still want to grow this meetup just for the sake of meeting more people, and you know, at the end of the day, really like making more money doesn't really make me like that happy. I think the people I get to talk to about this subject and like that really want to listen to this subject is more fulfilling. And then I think if we all make money together, we could eventually do bigger projects together. So that to me is like a really cool goal to kind of shoot for. But we'll see how this club evolves. Shout out to you, man. Thanks for coming. you're the first and only right now. And with that being said, we're going to start right now. Today we're going to talk about the stock market. We're going to talk a little bit about share buybacks. I also thought about some of the topics that you guys asked me last time, which is, I know JC said he wants to hear a session on deflation, inflation, economics. I think that's something I do want to talk about eventually, but not yet. I do want to get back to the gold, dollar, oil, and the euro dollar discussion that we had, but I'm waiting until the gold report that comes out at the end of this month before we revisit this topic. For now, today we're going to talk about stocks because the markets, to me at least, are looking like it's performing relatively well. And there are certain things that are happening in the markets that give me this reason to be bullish once again. So to start off, right, the very main one is definitely share buybacks, but we won't jump into it just yet. We're going to look at around the world. So around the world, real quick, the U.S. indices, Dow Jones, S&P 500, NASDAQ, and Russell 2000, all right here. This one's retracing back over here. This looks good. If this breaks out higher, that's even better. S&P 500 already retraced this pullback right here, and it's already going higher. and this was the bounce off the 200-day moving average, as well as this one right here. So that looks good. NASDAQ definitely looks good. All right. Russell 2000 looks good as well. So markets are recovering really well, at least on the daily. And then so Nikkei looks really good. All right, daily. Europe, Euro Stocks 50, and then the DAX. Everything is kind of trending up. And most of all, the volatility index is breaking down, which is something I really, it's good indication for me. Breaking down that 15 that we've been watching for quite some time, guys. So markets are looking a lot better. So Liz, I know you just joined. We were just talking about how eventually I'm going to switch the meetup location to Cupertino.
Oh, really?
Yeah.
Okay.
Do you live near Cupertino, or
No.
is it further for you?
No, it's, I think, equal.
Equal?
It's maybe better than better.
Okay. Yeah, because I'm thinking, yeah, well, we gotta. I don't know. I really like Cupertino because after the meetups in Cupertino, I could run to like Main Street, Cupertino Main Street, and get some coffee at Phil's and study there, and I like the environment there. But anyways, going back to this. Let's see, where was I? So the VIX is breaking down, guys. I really like that. If you guys look at the VIX futures, the VIX futures is in contango. We'll review it in a second after we go around the world. So those are the indices. They're looking better. Let's pull up the weekly, right? So this is what it looks like for the weekly. Dow Jones, that big green candle, two reversal hammers right here, right? Hammer right there. Same thing right here. This one looks like it's going for a breakout, looking pretty good. Nikkei recovering more than 50% from the high right here. Same thing with this one, a little bit more than 50% already. Here as well, 50%. And VIX again breaking down. Look at that 1 week red candle. Let's pull up the next one. Let's pull the VIX futures real quick. This is what the VIX futures looks like. The futures term structure. A quick review for those of you who are new to the volatility futures curve. Let's see if I could pull up that one picture that I had. Where could I find that? Oh my gosh. That one document that I had on, let's see, technical discussion, volatility. We had a discussion on volatility, and I talked about, nope, none of those. I drew this one awesome picture. I generated so much content that I don't even know where it is anymore. It should be somewhere in here though. I really want to show you, okay, derivatives resize, derivatives, let's see what this is. Oh yes, perfect, okay. So what is the volatility futures curve real quick, guys? I drew this out on Paint. It's a little small right now. Let me see if I can zoom in, control, okay, there we go. So how important is the futures? I won't go over, real quick, shareholders, corporations, and then shares traded. Shareholders, corporation, shares traded plus bonds traded, right? Some companies have bonds that you could buy as well, most. Shareholders, corporations, shares traded, and then you could trade the options on the shares traded, right? And then going down to S&P 500, it's a collective of 500 companies, the top companies in the stock market. And then you have the SPY ETF. Well, it becomes an index right here, and then the SPY ETF, and then the SPY has options. And as you can see, the size really matters. How SPY shares are not as big as the options, the derivatives market, right? And then from there, we go down over here, we have S&P 500 shares again, to the index, to the shares traded, and then the options, right? From the S&P 500 options, we do a little mathematics, we get the VIX index. And then from there, the VIX index has VIX futures contracts, which are 8 different contracts, and they're really big, which ultimately creates this volatility futures curve. And that's really what we're looking at. So a quick recap on that. It's really a powerful tool that follows the S&P 500. And this is really how it derives itself. So that's why I really pay attention to it. So guys, the formation, this is what it looks like right now. We have that contango formation, and all first set is positive, second set contango is also positive. So things are looking pretty good. At least the futures traders are in agreement that things are looking good. So I want to continue to see this formation. Moving on back to the around the world pages. Let me know if you guys have any questions on that. I know it's kind of like a quick review, but if you don't understand the importance of volatility or this volatility instrument that was created in the markets. So back to around the world, we looked at indices. Energy, I know oil has been rallying a lot, so definitely if you guys are actively trading, I think oil stocks are something to look at right now. They are performing relatively well. You can see that in the screener as well. If you just go to screener and then you go to sector, basic materials, and then you further categorize it by just oil companies, right? Oil, right? And then you check out the three, let's do actually biggest to small first, market cap down, biggest oil company all the way down, and then we'll look at performance. Check out the performance quarterly, right? The past 3 months, 30%, 9%, 21%, 33%. Let's look at the charts, bam. So oil stocks are getting pretty hot right now if you want to play those. Here's a great way to kind of view the segment. So they all look pretty good for energies. Going back to that. So I don't look at these, I just look at this one, crude oil. Let's look at bonds. So bonds have been going down, if you pull up the weekly, for quite some time, right? It looks pretty bearish. It looks like it wants to break down. The 30-year, the 10 years already breaking down, 5 years already breaking down. But on the daily, it looks like it's retracing a little bit, a little break right here. All right, let's see what happens next. If interest rates continue to go up, then bond prices should go down. Though I have been reading that there is an interesting phenomenon that this might not happen. Like we might get bonds going up and interest rates going up, but I'm not a bond expert enough to talk more on that. So this is just the current market condition that I'm showing you in bonds. That's what it looks like. Going over to softs, nothing much to review here because I don't trade these, but I think it's nice to look at. So lumber continues to go up. Same thing with orange juice. Let's look at corn. Corn retraced. It broke down 400. So we know that it broke out when we were looking at it. It broke out right here at 390. Right? If you wanted to do short-term trading, nice move from 390 to 400, and now we're breaking down 400. So in my head, the next price that if it goes down to, if it retraces, is probably 390, and then a bounce higher. If I'm looking at the secular, well, not the secular trend because it's pretty cheap. Like this is what the secular trend looks like. A lot of the people on the Real Vision said that corn is bottom, or at least commodities at bottom, and they're looking to, they're seeing momentum in this space, and they're looking to go long. So just another thing that I kind of pay attention to. Like I said, I don't capitalize on that. I'm mostly a stock trader, just because my interest is over there. But again, it helps to look at all these. So let's look at the meats. What's going on in the meats on the daily? Any action? Nothing too interesting for the meats. So metals, gold. Right here is the 200-day moving average for gold. And remember, gold and the dollar or gold and commodities have an inverse relationship. We know that the dollar broke out right here, rallied up, and now it's kind of like taking a little breather. Right, a little breather right here. So if you look at gold, a little rally right here. All right. But we'll see. You never know. These patterns, right? Looks something like that. This could set it up to go lower. We don't know. But I'm waiting for the end of the month to read that gold report to talk more on it. Today we're going to focus on stocks, so we won't talk too much about gold. Let's see what else. Currencies we just looked at. So if the dollar was rallying and then now retrace a little bit, you're going to see retracement in the other currencies, right? A little retrace right here, some retracement, some bottoming, retracement right here. Because all of these are against the dollar. That's pretty much all I have to say. But let's see where the dollar goes next. All right, we got a pattern fail. Looks like it wants to go up from here, but yeah. Okay, let's jump into it. So S&P 500 guys broke out 270, right? Next test for me is 275 and 280. it really looks like it wants to go up. It's all above the 20, 50, 100, and 200-day moving averages. We had a triple test. The pink line is my 200-day moving average, that major line that every institutional investor is watching. So we had a test right here, another test right here, another test right here. And now we're breaking out from that previous resistance. So it looks like in the short to midterm, we want to go higher. All right. One of the big news as of recent, I don't know if you guys seen this, share buybacks. I pulled this from Barron's. What it is let's see, scooping up stock. Companies in the S&P 500 index may repurchase a record of 650 billion of stock this year. This is the estimated. And the source is S&P Dow Jones Indices by Goldman Sachs. Do you guys know what this means, or like your opinion on it? It's definitely higher than 2007. But essentially what they're doing is the S&P 500, the top 500 biggest companies, are buying back their, well, collectively, the aggregate, they're buying back their own shares, and it's showing, I mean, that to me is kind of bullish, because you're taking these corporations are essentially taking a position. And if you take a position, let's say yourself, you buy a stock, you expect it to go up, right? I don't think anyone buys a stock and expects it to go down on the long side. If you're short, then you expect it to go down. But these corporations, as of right now, we're seeing record buybacks. You could kind of back test it and say, 08, let's say you only know up to here, right? After a record share buybacks, we get another record and then another record. So now that we have a record right here, there's a good chance that they see higher prices and more record purchasing to come. But we don't know that. But what we do know is that these S&P 500 companies are holding up the S&P 500 by doing this, right? Let me know if that sounded confusing. I'll explain it another way. We're heavily looking at SPY, right? And these companies are at a record in purchasing back their own shares. So, are they purchasing it at the 200-day moving average? Something to think about. But if these 500 companies see value in their own company's stock, and they see it going higher, like Apple, who recently initiated a buyback on May 1st on their earnings call, man, they're going to make their company go up to 1 trillion. Did anyone think about that? Apple's at like 919 billion right now, and if they're buying back their own shares, I think this is going to be the first public company ever to be 1 trillion in value. That's going to be awesome, and it's going to be in Cupertino. So these meetups gotta happen in Cupertino eventually. But question to think about: if this year is going to be a record year for S&P 500 share repurchases, then what is the expected move of the S&P 500? Are share buybacks occurring around the 200 MA? That's something I thought about. If S&P 500 companies are buying shares, then do they expect share prices to go down? I don't think so. They're betting on themselves. They're repaying their investors, right? If you buy back your own shares, the shares outstanding are reduced. That's a headwind. That's a tailwind for stocks, for their stock. They are basically taking an investment position, and so they too want a return on their investment. So if you buy back your own shares and you raise your dividend, what does that sound like? You buy back your own company and you raise your own company's dividend. You bought your own shares basically to get paid a higher dividend. Yeah. So some of the mechanics or dynamics that they're doing. So no, buybacks are good for investors because shares outstanding are reduced and the stock appreciates from a big market buyer. But from perspective of the corporation, right? So okay, let me explain. From the perspective of the buyer, that's good because your shares go up. But the perspective from the corporation, this is good too, but this will act as leverage for the corporation, right? You're essentially 2x leverage now if you buy back your own shares. And so if a drop in share prices can do heavy damage to the company, if you think about it. So I think.
And if we comment on buybacks, Just on buybacks, when the corporations have the highest buybacks of the whole entire section of corporations, take a time period, that usually means the top of the market. If you look at 2007, the highest buyback by companies were exactly at the top of 2007, right? And the same thing is what happens is they become so confident that they're buying back everything, they become complacent, and that's the time where you get a top of the market. But who's to say that we're going to have an even higher buyback? So, it just happens that the highest buyback is the top of the market usually. Because they get extremely complacent.
So I know it's kind of scary, but to me, I kind of think we're gonna have a blow off top, like the S&P 500 is gonna go like really straight up before we go down. I mean, I thought we had it recently with the January rally. Pull it up real quick. SPY. That crazy right here, right at the January. I don't know if you noticed, but stocks just went parabolic, right? And so I thought this was the blow off top, but we're kind of recovering. So I'm monitoring the recovery right now. So yeah, I mean, you could say this was an all-time high. Well, you could say this was an all-time high for share buybacks, and then this was also an all-time high, and then another all-time high, and then all-time high, and then bam.
Right, exactly. So we could still be going higher and higher buybacks, and if we do, most likely we got a higher top. I'm just saying when we actually do get to the top, it's going to be at the highest buyback, when it happens.
Yeah.
But you're right. We could, 750 billion, 19, and then 2020 maybe like 900 billion. So all I'm saying is the top is usually the top of the market or the highest buy.
Look, if you perform technical analysis on this share buyback trend, like a breakout, right? It looks like it wants to go higher. I guess you could kind of say, right here, it broke out right here, broke out, went higher here, broke out, didn't go higher next one, but it did break out here and then went higher, and then broke out but went down. But this is a record one, where this is like an ultra breakout because it includes this year. And
that's estimated, right? It hasn't happened yet, right? It's estimated to happen at the end of the year.
Yeah, it's estimated. You're right. So let's see how the realized performs moving forward.
Exactly.
Something to pay attention to. I mean, it was in the news recently, right? If you look at Apple, let's see, where is it? AAPL. Apple, right? This is the press release right here. Press release May 1st. Apple reports second quarter results. Wait, is this the one I was looking for? Revenue growth. Right here. New 100 billion share repurchase authorization announced. Dividend raised by 16%. So they're going to repurchase their shares and then raise their dividend by 16%. That's very attractive for shareholders. I'd be looking to get more long Apple at this point. If you analyze Apple chart, we're going to get to Apple in a bit. So let's breeze right through this. So that's the detailed analysis of S&P 500, guys. It's looking good. What I want to see next is 270 hold, right? It could retrace back down 270 and then go higher. That's really what I want to see. And clear to 280 and then ultimately clear the high 285 or 286-ish. If we can clear that, that'd be really good. And I think we'll shoot for 300 if that's the case. If not, the bearish case is a break below 270, back down to 200-day moving average. That's the scenario I don't want to see. For the NASDAQ, the QQQ, same thing. You guys notice the gap right here. We're going for a gap fill. We have resistance right here, but we broke that resistance recently, right? And again, above the 20, 50, and 100 and 200 moving averages. So QQQ looks good as well, which we already reviewed in the going around the world analysis. Again, the VIX, another picture breakdown, just something I want to point out. This is good to see in terms of long side trades. Again, volatility futures, contango, positive, right? And the VIX is about at 12.65. So these contracts have to travel down to the spot VIX because these are futures VIX. They're occurring in the future. And then real quick, wave theory. It's funny how I run these meetups and then I pull up this guy's website, but basically I'm kind of, if you think of it as a business, I'm outsourcing my wave theory consultation or my wave theory analysis. So basically, this guy is like the guy on wave theory analysis. And if you notice, his is OEW, which is objective Elliott wave. So he does it very objectively. What was he seeing as of May 10? Right? Short term, gap up, opening, and rally. Medium term, uptrend. Long term trend, uptrend. And it was switched as of most recent. The last one, it was May 8. And he was kind of like downtrend for the medium term. And he still had long-term uptrend. So that's his view on it utilizing Elliott wave analysis objectively. So he flipped it over to medium trend right here, uptrend, as of May 10th. So yeah, that's the Elliott wave. What else? So I already talked about oil stocks, buybacks in S&P. Ooh, I want to see this. Every time you send a link, I gotta see what you got. So this is the buyback trend, I'm guessing, or S&P 500, and then buybacks right here. So Q4. Oh, so dividends. Okay, I see. Hey, this is pretty interesting. Where'd you get this financial market analysis? Yeah, I'd love to get more charts like this. Source is from S&P, Standard & Poor's. So 2007 buyback. If we can get a record, could be. Okay. Hey, thanks for sharing this, JC. You have any comments on this, or? All right. Moving on. So oil stocks. So this is the oil weekly right here. I think there's been a lot of activity in oil, at least from me running a scanner, right? Let me run a scanner real quick and how I see oil. So go to screener, and if I pull up serious companies only, right, over 10 billion, and then I just run a quick scanner on performance as of late, who's performing for the quarter, I pick up some oil companies in here. See, here's one, Holly, Frontier, oil and gas, oil and gas, oil and gas, right? Keep in mind, I only have one filter in here, so oil is performing. Oil companies are performing. So if you're like in short-term trading, or you want to, well, I don't know about investing because I don't know the fundamentals of oil or oil companies. I'm more of a tech fundamental guy, but I could tell you that it's popping up in my scanner. So here's another oil and gas, oil and gas. That's what I'm seeing, oil and gas right here again. So I just want to point that out for people who are active trading or just want to get some moves, right? This one's moving. Any questions on oil before we jump into stocks? Something that we haven't done in a while. Let me just take a sip of water. Anything new with you?
Oh, no.
Nothing?
Not investing a lot these days, sir.
Is it because of volatility?
Yeah.
Okay. Yeah, I mean, same applies to me too. Though I didn't see much of a spike in like the long volatility derivatives, like UVIXI. I didn't see much of a spike. So I don't know. And then XIV is gone. Can't trade that one anymore. So I guess on the topic of volatility, the more advanced stuff, I'm looking at going long this one. Just because the fundamentals are screaming higher. So, but this is, guys, not a recommendation, right? All for educational purposes. Like this, SVIXI is, I don't know. I think it's a great opportunity for me.
Can we see a long-term chart?
Long term? Well, so
Oh.
yeah, long term for this one, you can't. Like I said, I don't perform technical analysis on volatility.
I'm just wondering what happened.
Yeah, volatility implosion. So basically, this is like a very popular trade for people who are actively trading, and basically it appeared that everyone was in the short volatility trade. So this is basically the short volatility trade. Yeah. So I'm just gonna mute real quick. Yeah. So this is the short volatility trade, and everyone was on that side. And so in February when we had the pullback. This thing just gapped down really hard and exploded. And then the security, the XIV, let me see if I can find it in my folders, XIV. I took a picture before it disappeared. Volatility.
XIV is inverse volatility.
Yes, yes. Let's see. Sorry, you guys are looking into my messy folders. Big spike. So that was February. Big spike, big spike.
XIV termination, is that?
There we go. Oh, that's a video. Yeah, so I'm a little geeky. I like to document this stuff. Whoa. Okay, yeah. So this is the gap down, and then it just broke. So why did it break? Basically, this instrument, right, if I recall correctly, is by Credit Suisse, and they had if you read the prospectus, which is like the legal document explaining what this instrument is, a prospectus for stocks will communicate to investors how this business operates. Now, prospectus for XIV, which is an ETN, it communicates to investors how this instrument works, right? It's not a business, right? So it's not going to explain where do we get our sales from. Well, I guess it kind of does from transaction fees, but it talks about how the instrument works, and basically if the instrument experiences, I forgot, like a 20% pullback in one day, something like that, it will go bust. Like it will no longer, I think it was like a 70% break. I forgot the number. I do, I have a printed copy of this prospectus in my drawer. Yeah, I'm so like really geeky.
If it goes beyond that, what happened? What happens?
Yeah, so the way they engineer the instrument is if it breaks that, they will take it out of the market, no longer play it. Yeah, so that's why this happened. So it's a more sophisticated topic.
So it can never go back again, right?
It's gone now. This instrument is gone. They terminated
the other one, like SPXY, it's following XIV. Right?
Yes, so this one didn't get terminated. So during that February drop in the volatility, spike, and the drop in these instruments, we thought this one was going to go away, but it didn't go away. So all the volatility traders, they went from XIV, now they're trading SPXY. And then Europe also has its own XIV, so this instrument is still available. Yeah. So.
Hey, Kate.
Yeah.
It's the SBXY seem to base. It looks like there's a base. If you look at it.
Yeah.
Oh well. Yeah, there it goes.
Yeah. So Tim, I don't perform technical analysis on this, because it doesn't trade on technical analysis. It trades on. You can perform technical analysis for short-term entries and exits, but it does not trade. It trades on mathematics. It doesn't trade on.
Oh, I see. Okay.
Yeah.
Because I thought I see a base and that's it dropped a bit more. So yeah, that's where I went wrong.
Yeah.
Thank you.
No problem. So to further add, so.
My question is like, can it go back to 140 level?
One what?
140. It came from 140 to.
Oh yeah.
Never, right? Never.
Maybe. Maybe. So there's a chance that this might, but it's a very long term, and we might have another spike down like this. That's just the nature of this instrument. So if you're seriously going to play volatility, right, guys? I know today I'm going to talk about stocks, and I was going to have a volatility topic at the end. Where did I put it? I put it right here, right? But we could talk about it right now. If you're going to play this, you have to really follow the futures curve. That's like the true fundamentals. And then on any volatility spike, you have to cut your loss right away. This is a mathematical game more than a analyze the business game, okay? There's no like, oh wait, we'll go back up.
There's no sense of.
There's no sense of direction. Like this, like, how do I say it? It could go, right now it could go like this, and then it could go up, and then down like that, and then it could go up, right? And then down like that again, right? There's no valuation behind this.
Is it a leveraged ETF?
Is it what?
A leveraged ETF?
I think this one's 2x. No, I think it's 1x if I recall. I have to get back to you on that one. UVixy is 2x, but I think they updated it to 1.5 now.
This is also going down.
This one's the long volatility, so this one will keep going down. All right. So again, these are mathematical instruments, a little bit different.
How about the short-term volatility? Is that you know more it's it's like more predictable? Well, not predictable, but you know it's less risk than long term.
Which instrument, Tim?
Yeah, that one right there, TVIX. I
Yeah.
think that's short term. Yeah.
Yeah, so I know you've been looking at this and you're eyeing the bottom, right? You're performing technical analysis.
Yeah.
Yeah,
That's
the issue is that while you were performing this, if I were to draw the volatility futures curve, we were in backwardation, right? So this is the fundamentals were like this. If the fundamentals were like this, and you were betting here, that made sense, but you were betting in this condition.
oh, I see.
So the
Okay.
fundamentals were saying it's going to go down, and if you continue to trade it, right, this will happen next. It'll go like this, and then you're going to think like, oh, it bottomed again, but it's going to go down, and then it's going to bottom,
Oh, I see.
right? And then what they're going to do next is they're going to reverse split it, right, making the price go back up, and then same thing's going to happen again, right? So every time they reverse split it, it's going to go back up, and it's going to look like this. You see what I mean?
Well, what about like if you have a big market downbeat, is it gonna spike up
Yes.
temporarily?
Yes, like this. So February we had a big move. It spiked from $6 to $14. Like I said, it's only a trading instrument, and I would only treat this as like don't perform technical analysis. Just look at the futures curve. Look at the S&P 500. However it behaves, play it with the VIX or play it with the S&P 500. So if the S&P 500 is experiencing a ton of volatility, people are fearful, then you go along this.
Okay.
Yeah. So
The way I see it is if S&P, let's say reaches like close to 2,800, there's a chance that this might spike up.
yeah, but you want to do it when you want to catch one of these.
Oh, okay.
Yeah.
Gotcha.
Not like a bounce. You don't want to trade like right here, right? Let's say 270. What date is this? This is the interactive. That would be April 19, April 18, right? If you look at TVIX on April 18, 19, April 18, 19, right here. It didn't go up much. You see what I mean? 18, 19, right there.
Yeah.
So what you want to do for this instrument is look for those huge volatility spikes, and then for volatility to continue to go up, we have to be in backwardation with the futures curve.
Yeah.
Yeah. Okay, so that's enough for that. Let's jump into stocks because I got a lot of stocks I want to go over because if this is a really reversal, I'm looking at a lot of stocks to go long and add more to. I think we'll skip this part, but basically what I wanted to say for these these spider ETFs, basically whatever sectors you tend to trade the most, like tech or financials, because I know SK, he kind of told me like, hey, I think we're a little too concentrated in tech. Well, not a problem. We could follow the tech index. So for example, they have a ton of different ones like XLE is energy, utilities, technology, basic materials and stuff, right? But let's say if you're mostly a tech trader, you want to look at XLK. So let's pull up XLK real quick. Oops. XLK. Bam. So XLK right here. So we could, instead of looking at the S&P 500, we could look at this as our index for trading tech to protect ourselves from tech if we get like a huge downturn. But it's looking really good. Break out the 68 and higher we go. So
XL is doing well last.
yeah, things are doing well, and so I'm getting bullish on stocks or getting ready. But like I said, trade with your own risk management in place.
I was seeing XLE, like the oil one.
Yeah, I saw XLE. XLE did really good because oil's been doing really good. This is XLE, guys. So a little pattern,
It's breaking up.
right? We got a breakout right here, right? Bull flag right there, another bull flag-ish right there, and then we broke down right here. That breakdown right there. Right, and then we had a big pattern right here, a rejection to the upside, right, and then another setup right here, and then higher we go, right? Very similar to SIVB, right? I said that it gapped up, setting up, and went, it's going higher again. Same thing. So SIVB looks really good. Bam, right there. We got that gap up and go. I think this one could go higher, just because it's not that big compared to all the other tech companies. And if I recall, Silicon Valley Bank is a portfolio lender. What does that mean? When you go and get a mortgage at, let's say, Chase, right? So let me draw. I think it's better if I draw it out. If you get a mortgage at Chase, this is Chase. This is you. Right? You get a mortgage, meaning you're going to be paying money. Let's say this is you get a mortgage for the home, right? And you're going to pay them money, right? To Chase, and Chase will get that basically they get a contract, right? A contract because so Chase. Wrapping my head around this. Hey P-Shane. So you're going to Chase to get a mortgage, and you buy the home, so now you have to pay the mortgage every month, right? And Chase holds your contract, and you pay Chase back, principal and interest. But that's if they're a portfolio lender. That means they hold the contract. But what they're doing is they're bringing it to a market, and they're trading it to an investor who wants to buy your mortgage contracts. And so that's why we created the whole mortgage-backed securities, and then the writing insurance on it with like Freddie Mac, Fannie Mae, Ginnie Mae, Fannie Mae, right? They do the whole derivatives and all that. So that's the back end of it. But SIVB, they hold it on their balance sheet. Does that kind of make sense? So that's a little bit more secure versus like the other way around there. I don't know. So
Isn't it more risky for them?
it's not risky for Chase, but they're making money. So what happens is
Maybe not for, no, I mean, how is it SIVB doing it differently than Chase?
they're holding the contracts in their name. They own the contracts. Versus Chase, this is what Chase is doing. They sell the contract to the market, right? The market gives Chase money. What does Chase do with the money? They lend it to another person, right? That person will bring it back to Chase, another contract, and then Chase sells it to the market, and the market returns them money. And then, again and again and again and again.
How is SIVB doing it differently?
SIVB is holding it in-house. They're holding the contracts because they pick specifically who they want to lend to, which is the innovation economy. So the commercial lending side, the corporation lending side, they only want to lend to great startups. And they have really experienced bankers who go out and do that. I was on the private banking side, and we only lend to venture capitalists and tech executives. We don't lend to an analyst at a company.
So when you say the Chase is selling the contract to the market, that means it's kind of they're raising money from the market to service those contracts. But SIVB is holding those contracts. Who's servicing them? Like how are they getting funding to?
Like the VCs who are holding their money there, or the innovative
It's kind
startups.
of in-house.
Yeah, in-house. So it's more robust, and I think it also has a name brand, right? When we think about marketing, anything that has a name, like a name that a household name that everyone recognizes, like Yelp. Though Yelp didn't perform for me this week, we're going to acknowledge that today. Like I said, that's why you have to have starter positions. But anyways, I think Silicon Valley Bank has a name, around Silicon Valley, not just Silicon Valley, but also in like Israel and Shanghai and all that. They're targeting purely the innovation economy. If you guys don't recall what the innovation economy is, it's basically if you draw a line from here, right? Actually, this line would be a J curve, right? They will be, so this is the mature phase, right? And then we got the growth phase. I guess you could say, well, this is also growth. Let's say growth 1, growth 2 phase, and startup phase, right? So Silicon Valley Bank, they cover this area. They lend to this area, right? Not just the companies, but also the investors in this space, right? You're gonna have early stage angel investors, tech executives. That's the space that they lend to across the world, right? Other guys like other commercial banks, they might be lending to mature companies like General Electric. General Electric is trying to get back to this level.
I think it has hit the bottom, right? Now it's trying to get back.
I can't speak to that. I could perform technical analysis on it. I guess I could kind of disclose what I do, but no, I shouldn't. not when we're recording stuff. I do have a treat for you guys at the end of today. I want to show you this $30,000 software that I get to perform B2B sales. But we'll save it for the end. So I gotta make time for it. I do have a hard stop at 12 o'clock today, guys, because I gotta go visit my grandma's graveyard. You know, Mother's Day, right? So that's my hard stop. Just want to put that out. So let's get into analyzing stocks. Palo Alto Networks. This one is incredible. All right, we had a February pullback. It did not damage this stock at all. To me, that's very bullish, and this is a Gartner leader as well. So let's pull up the technicals real quick. Wrong one. Right here, PANW, Gartner leader. Now, for those of you who don't remember who Gartner is, they are the IT consultants that do reports, deep reports. They hire all the analysts. They do reports on enterprise companies. So I work at General Electric in the GE Digital, the software division, and I do enterprise sales. So I go out there and I target enterprise executives and sell them our products like Predix and stuff. So if you guys don't remember, at the very bottom, if you go to Great Mall and stuff and all those kiosk stands or Valley Fair, that's retail. And then if you go to like SMB would be like Supercuts, SMB. All right, maybe that could be middle market. Middle market would be like a $50 million revenue startup, right? That's middle market. And then enterprise level is like Apple, Amazon, Facebook. So I sell to this market, and the sales software that I get is called Discover.org, and this gives me all the contacts of people in that space. So for example, Amazon, right? Or let's do, let's do Intel, right? If I want to reach out to Intel, I want to get some deals, I'm going to reach out to, let's see, whoever I get, C-suite, the CEO. If I want his phone number, right there, though I won't leave it for long because I don't think you guys should be reaching out to the CEO of Intel, right? Well, I mean, it doesn't really matter. This is a $30,000 software. I don't spend that much money, but I'm equipped with those type of tools to go and get deals for the company. So that's the beauty of it. But I want to bring this up today because we're going to review the tech stack, which is very valuable knowledge in my opinion. But going back to this, so enterprise level, right? So Palo Alto Networks, they are a Gartner leader, and they cover enterprise cybersecurity, network security, enterprise network security. We're not talking about your home internet, right? You're trying to protect your I don't know, your network of like 50 feet, 100 feet, whatever. We're talking about the whole enterprise network. They protect that stuff. So it's not a simple $100 a month for protection on your network. It's probably in the millions. So this is a Gartner leader. Looking at the technicals real quick again. Oh, didn't look at it. This is what we have for a daily, guys. As you know, we pulled back in February. This thing did not pull back at all. It still remains above the 50-day moving average. So I really like this one. I think it's finally breaking out all-time highs. Is it?
Yeah, across the 200 for the first.
Right there, all-time highs. So I love that. This is the monthly too. This is aggressive. I think it could go higher. I'd be watching this one closely. I know it's $200. I'm not gonna buy shares on a $200 stock. I buy options on it. Just because options are cheaper. Only 18 billion. Relatively cheap when we're considering enterprise level, right?
Doesn't have PE.
Huh?
It doesn't have the PE.
It doesn't have a PE because it has no earnings yet. But like I said, earnings are negative.
Yeah.
So there's no PE.
Oh, somebody's downgraded. Just now. Okay.
So I wouldn't look at what analysts say, because analysts, well, I mean, that's up to you how you want to play that, right? But personally, I'm playing this. So this is where I lean more on the business model. Guys, if you remember, we had a session on talking about, we'll make a trade or investment on the technical setup purely, or the financials purely, or the business model purely, or the macro trend purely. To me, this is part of like the data center, cloud, cybersecurity macro trend. So I'm betting on that trend because I think that's how the market behaves. They will buy before the money actually comes in.
So when they say it's a negative operating margin, that means their expenses are rising.
Yeah, they're still in startup phase, as you can see.
Still having losses, I guess.
Yeah, they still have losses, but the market is saying different. That's the issue right there. Versus Arista Networks, where they're very profitable, as you can see, and the market's in agreement, right? I don't know if you guys watched this. I know Sylvia has a position, but it gapped down, retrace, right? I think this was a gap down, retrace, and then gap down, retrace really well. So I know earnings look bad, but it still held the 240 level that I've been eyeing. So fundamentally, this still looks good. It's also a Gartner leader, right? Gartner does the analysis at the enterprise level. That's critical for us. Because enterprise cash flow is the biggest cash flow I could think of. Can we think of any other big player? Maybe like a country. A country might buy bigger, but they are more into infrastructure, physical infrastructure, not digital infrastructure, right? So I'm a specialist, because I do enterprise sales, so I'm a specialist in the enterprise software space.
So if you take these two examples, like ANET, where all these gross margin, operating margin, profit margin looks positive, and you see a Palo Alto network which has a value that is based on their market leadership position, but still it's like negative operating margin.
So the negative operating margin is probably because you won't see that in mature companies. Maybe GE. Yeah, you'll see it in GE, but you won't see it in like mature.
I'm trying to compare like these two kind of leaders in their respective domains, ANET and Palo Alto Network. One is in positive on average front, and one, even though it says the market leadership position, but it still kind of has negative operating margins. So I'm trying to understand.
Okay. So your question is a little bit different as to, you're trying to understand why they have negative.
No, why they have negatives on some of the parameters, but still they're valued so highly.
Yeah, so I'll give you this example right here. So Yelp. Yelp is a $3.6 billion company. Now, I know it's not enterprise, but it's relatively small compared to Meal. All right, if you guys know, Meal got acquired by Salesforce, which is enterprise level, for $6.5 billion. So that kind of gives you an idea of like how willing enterprises are willing to transact, right? If I, like we don't have the data right here. I do have a picture. Meal. Let's see, desktop. Meal right there.
Can you show the finance before the acquisition to see?
Yeah, I know. I'm trying to do it right now. Meal soft. Where can it be? There we go. Don't worry, Kay's got you covered, man. Right? Like, so like once they get bought out, well, it's funny, they get bought out into like Salesforce, which is still public. We could still see it, but they might not show it like this. So this is Meal, guys. Check it out. So Salesforce bought it for $6.5 billion. They're willing to buy at a multiple about 15, and then a multiple about almost 20 or 19 on the balance sheet. They're willing to pay 20 times the balance sheet for the company. Such a premium, right? At 4.3 billion. That's why when I look at Yelp, considering the influence that Yelp has, I know it's not enterprise. Yelp covers SMB. They definitely sell to SMB, right? Their gross margin is impressive, but they're still in startup phase, and so this gap down is expected. But look, we had a gap down here, retrace. So I'm hoping, okay, not hoping, but I had a starter position before earnings. It's against me, right? 5 contracts. I'm planning to add, my goal is to get 20 contracts on this. So that's the equivalent of about 2,000 shares on options. I'm holding it 6 months plus. I'm trying to build out a longer term position. I might have timed it wrong on daily, but I'm looking at the monthly. The monthly is showing me a bull setup. And it's relatively cheap for what it's doing. So for every tech IPO, I love, like I already mentioned this, I love to see it going up, get all those people who are impatient out of the way, let them get hurt, right? And then find a bottom, right? Now, after all the excitement is gone, that's when I want to come in. When everyone, so basically they had a big, Infinity War Avengers, right? And everyone like kind of just, everyone's like worn out now. That's when Kay comes in to look for opportunities. I mean, that's kind of like how I prefer it. So as of right now, I do see holding 30, but mostly 40. I'm eyeing the 40 really hard. For my position that I'm building out right now, I need 40 to sustain. But I am seeing a setup right here that might want to go higher on the monthly.
So for your previous What has options, been a while it is on that?
Why is what?
It has been a while, like.
Yeah,
so
this is a long time because it's monthly, right? Each one is a month. So someone's been accumulating for a while.
So for the previous position that you took on options, 48, even if you were to sell those options, if it's out of money, you won't find buyers, right? So you're stuck with it. Okay.
Well, I bought at the money, so there's still activity, but I'm not gonna. It's against me right now, like 1,000. But I'm not gonna take my loss because that was my plan, right? If you guys go into this, I said Yelp was my starter. All right, I'm taking a starter small position on Yelp in anticipation of a breakout and momentum run. Stop is wide for this one because position is small. Ideally, I'd like to see earnings gap up and hold. It did gap up, but it went back down. It gapped down actually. So, but this looks like a potential super runner because of the growing sales, technical setup, and platform business model. Strong reasons for a run, but remember, risk management comes first. Might be a good idea to check out earnings call too and see what made it get. Wait, I think I'm talking about something else there. But basically, I have a starter position and I'm looking for the next bottom. I really want $40 to hold. If not, I won't size up more.
So you think that it will go down more? Or
Yeah, it could go down more because it's a gap down.
Oh, okay.
If you look at, man, I was watching this on earnings, right? If I could pull it back. Yeah, okay, it's not in here. I have to pull up the more technical charts. INTC. No, this was too technical. Let's pull up the other technical. More basic, Yelp. I was watching this, the after hours, and I got really excited. They got me really excited, and I was like, oh. Yeah, 52 would have been nice. So
it gapped down twice.
yeah, it gapped down. That's obvious, right? Because it opened and then gapped down, but it retraced. I think there's a buyer at 40. That's just my. It's under an assumption here.
Same type of thing happened with Intel recent earning. I think it went to. Yeah, it went to 57, right?
Yeah, so maybe some fund thinks it's going to go up, and then other funds think it's going to go down.
Yeah.
You see what I mean? Like, in this world, we're competing. In the stock game, you guys are not competing with just you and I, right? We're tiny. We're like the little goldfish. We're competing with corporations buying back their own shares, right? 100 billion Apple.
And this is all after hours.
Hedge funds, mutual funds, yeah, after hours. Hedge funds, mutual funds, whatever funds out there, right? We're competing with everyone.
And that was surprising, like,
But that's an advantage too. Don't get me wrong. It might sound intimidating, but it's an advantage because we could just ride momentum like crazy.
they were like around 53, 54, and after the earnings call, after hours, they went to 57, but when they opened the next day again, it was 53, 54.
Okay. So
So it only went up in the after hours, but it couldn't sustain the next day.
Okay.
Let's see. Let me know if you guys are okay. If you guys can
But
hear
I
well.
guess it will go up eventually.
Yeah, but I don't know why it gets a lot of resistance.
Yeah.
Okay, so that's Palo Alto Networks, guys. I'm detecting a lot of strength on that one. I think this one's gonna keep going up. If you're gonna play it, right, always have risk management somehow. But I love these type of charts where it's just going up and then just grinding sideways like right here and then breaking out higher and wants to go up. Same thing with Nutanix, another one. This one's awesome. This one's also a Gartner leader if I recall. Actually, it is a Gartner leader. This setup is very bullish. It broke 55. I know I got stopped out because of negative news, but you just got to get back in when it breaks out. That's just how the game goes. It's relatively small, and their market strategy is to tailor to the hyper-converged infrastructure for data centers, and they target tier 3 data centers.
Oh.
Now I know not everyone's a engineer, right? I'm not, but hyperconvergence, this is Nutanix, hyperconverged data center infrastructure play. Also, I want to mention that the February pullback, Nutanix did not get hit that hard either. So Nutanix is showing a lot of strength on the charts. Market macroeconomics or market opportunity, market direction, whatever. Hyperconvergence is making inroads in enterprises as major system vendors acquire startups. Sorry, it's kind of small. Major system vendors acquire startups or bundle servers with the HC software offerings. I know leaders should focus on the capabilities and limitations of HCI software, which is offered by a wide range. Okay, the point I want to put here is that they're in the high convergence market. Strategic planning, by 2020, 20%, that's a big number, of business critical applications currently deployed on tier 3 IT infrastructure will transition to hyperconverged infrastructure.
3-tier.
Huh?
3-tier.
Yeah, 3 tiers. So
3-tier is different than tier 3.
is it really?
So there are tiers of.
Okay, so I'm sorry, tier 3. So I pulled this up. I'm trying to learn more about this space. I'm glad you guys are coming in because you guys are
It's
the.
more like an architecture. So tier 1, what you have, tier 2, tier 3. So it's not like the companies are tier 1, tier 2, tier 3. It's a 3-tier system.
Oh, so this is completely different.
Yeah.
Oh, okay. Well, this is irrelevant. Well, then what can you teach me right here? 3-tier IT.
I don't know myself much, but
Huh.
this is a very common standard.
Yeah.
Layers. If you can think of 3 more like as a layers.
Okay.
of IT.
Okay. So I don't know. I guess I got the technical part wrong, but I got the Gartner correct. It is a Gartner leader, and I also so when I look at companies, right, guys? This is my account in Crunchbase Pro. If you guys don't know, I pay a lot of money for software. I know. I like to look at who are the investors, right? Who's got skin in the game. So Nutanix. This one's funded by, let's see. I gotta know who was in who was part of the facilitation of the IPO, right? The investors, number of fundings, how much funding over time, right? We got Kozla Ventures. You guys know who Kozla Ventures is?
Yeah.
Kozla, he's a billionaire.
Oh yeah. The founders of microsystems.
Yeah. This is the guy right here. He's an Indian billionaire. To me, it's like I don't think he takes position. I mean, these are like options positions, but I don't think he's taking it blindly. What is
Just
this?
for like high level, this is like what is
Client tier.
presented to the client side.
Uh-huh.
This is in the middle layer.
Mm-hmm.
How the data that's being presented to the clients, and it's going to interact with the servers at the back end.
Yeah.
And this is like the data tier where you have the databases, search engine, everything at the back end.
Hmm.
So
Okay.
this is like a standard 3-tier architecture most of the companies have,
Yeah.
which is different than. We can talk about it
Yeah.
more later.
We'll get into that.
But I think Nutanix is the what's the word?
What's the what?
Oh, what was it?
Three-tier IT infrastructure.
Yeah, 3-tier. If you guys could teach me on that, that'd be awesome. This is what we're here to
There's
do.
a standard
Learn and execute.
terminology in the.
Yeah. So I know you came in kind of late, but we're talking about eventually shifting the location to Cupertino.
Oh, that will be far.
Yeah, in the Keller Williams office.
Why is that so?
So I got some people that want me to get into real estate. So I'm looking to join this team and then utilize their facilities.
Okay.
Yeah, so if I could get this, that'd be great. It's just right by Cupertino Main
This is a
Street.
real estate company.
Yeah, it's a real estate company, but I want to get that room. So.
Are you getting a license?
Yeah, I am. I mean, dude. With Apple buying back their shares, 100. Look, they're gonna hire more workers. If they're gonna hire more workers, there's gonna be more jobs. More jobs are gonna cause people to want to buy more homes. It's just really hard to see prices going down right now.
Yeah.
And if these homes are gonna be like 2 million, you know how much commission is on that? Especially if you know how to sell. Right? Like one home could be like 20K. So I think it's about time I jump into this market. It's just.
So you already got a license?
Huh?
You already have a real estate license?
I already have like the application submitted a long time ago. I just haven't taken the exam. So I just need to go take the exam. But if I could join the team, I could utilize the office, and I think it'd be more fun if we do it in Cupertino. Or if not, we could switch it here and there. Do you live in Cupertino? Or around here?
Around here.
Okay. Okay, so maybe far for you.
Okay.
The Cupertino library is really nice too. I studied there, but they don't have a meeting room, so that's something I'm thinking about as of late. The hedge fund stuff, that's like later on when I'm like 30 plus. I'm not going to accept money until I feel more mature. But Nutanix, so on the weekly, guys, we got a breakout right here. This looks good. It wants to go higher. We got quality venture capital funded, funded by them.
But still losing money, right?
It's still losing money. It's weird, right? But the market is more intelligent than me.
Could we go down?
Mm-hmm.
Well, okay, so look.
Yeah, it's still losing money, but however you want to play it, right? You want something, okay, it depends. Each investor has a different risk tolerance. If you want strong financials and strong charts, you have to put in more effort to find. But sometimes the market will not give you that opportunity, and you will just have to play what you get. So that's kind of how I see it.
So I guess the valuation is coming on the basis of their leadership position in marketing as well. Even though they're like same as Palo Alto Networks, even they are not really profitable
Exactly.
on fronts.
Yeah, but it seems that they're not able to contain their expenses, so they are.
Same thing with this one.
Yeah, like this one at least is like.
Oh,
flat.
yeah, it's flat. You're right. Yeah, so we'll continue to monitor. You're right. It's a little bit different. So this is where, if you notice this is where you have to size your position a little bit differently, maybe less aggressively, right? But let's look at what other companies, because I got a hard stop at 12. Nutanix looks good. SIVB, we already talked about it. Bullish with 300 probably be my risk. Chipotle, this is a little bit different. It's not a tech company, but we are diversifying for SK's. No, I'm kidding. This gapped up and it's holding. I love playing gap ups because it continues in that direction. If you wanted to play this, 420 as your risk, and we'll see from there. This company,
What is the reason for the high valuation?
what's the reason for what?
The high valuation.
Now, when you say high valuation, you gotta look over here, not the price,
Oh,
right?
I'm reading it wrong.
It's incorrect to say 400 is high valuation,
Yeah,
That's a high
Right.
price.
because it could be $400 and one share, and the market cap is $400. So the valuation is actually right here.
It's a high price.
Yeah, it's just high price because share size is low. That means it's very, very volatile. So I might not recommend, but educate and say one contract, one options contract will be enough for your thrill ride or whatever.
But
But it's a retail, you would call it a retail segment, even though it's in food industry, but it's retail.
Yes, this is retail. So the money, the cash flow comes from retail. I'll draw it again. So the money comes from down here. And as you work up the pyramid, whatever, right, the cash flow gets more robust up here. Because at this point, it's almost infrastructure that's critical for technology, right? So the higher up that you could invest, the better. So Nutanix is up here, right? Chipotle is down here, right? But people have to eat, so that's like almost a default infrastructure. People have to eat. Yeah, so I mean, Chipotle looks like it's showing price action, but if you were asking me between this and SIVB,
I
right?
think this came from 700 or something, right?
Yeah,
After that,
Yeah.
the food,
Yeah,
the
Ebola.
yeah,
Ebola, something.
yeah, yeah.
They I think very susceptible for these kind of.
Oh,
I mean, if something the
Now-
virus breaks out, then
Now, SK, I know we talk about insider trading, right? But how about corporate buybacks? We gotta think about that too.
so. I was reading that corporate buybacks in some cases are like steroids, like some of the valuation that are going up for stocks just because on the basis of a share buyback.
Mhm.
It's not really reflecting genuine improvement in fundamentals. So it's more like steroids.
Yeah. So, I mean, regardless of the buyback, they do it through open market operations, meaning they have to buy it from the public market. So we will see it in
for
the charts.
something like Apple, you would say it's anyways a strong, solid company.
Mhm.
But some other companies which are just going up on the basis of share buyback, I would say a little risky place.
Mhm. Okay, so that's Chipotle. Now, I mean, I just threw this one in there because the charts look good in the short to midterm only, right? Short to midterm continuation trade. But Yelp looks bad. So gap down, avoid until clear support reveals itself. Note, previous earnings gap down held. Now I would also like to see current post earnings hold. So note too, Yelp is a $3.66 billion company. Good chance of acquisition if we think about MuleSoft at $6.5 billion. Now, if we think critically, who would be the person to acquire Yelp if it's at a relatively attractive price? Because the market seems to be acquiring at $6.5 billion. Who would be interested in buying a SMB-based software platform business at $3.6 billion? Small to medium-sized business,
Google can.
right? Like you think Amazon might be interested, or I mean, like something like that, right? This is speculation for sure.
Google is in the same space.
It's in the same space.
Yes.
Okay. Well, Yelp is cheap for them. I'm not saying it's cheap for us to buy. It's cheap for us to maybe buy a share, but for like Google, it's so cheap, right? They view like 3.6 billion as nothing, especially when you have a balance sheet of like 100 billion, let's say. So my thinking on Yelp is that it could hang out low, but I think it bottom. I think okay, I was gonna listen to the earnings call and get around to it, but I'm hearing that they're spending more on their infrastructure, like acquiring
So
stuff.
earlier if you had to like find food, you would go to Yelp or food. Now you do food near me on Google itself.
Mm-hmm.
So Google is eating into their space for a while now.
Interesting. Yeah.
Oh, does that work in Google?
Yeah, if you let's say you choose Indian food, earlier used to go to search an Indian Indian food restaurant.
Yeah, yeah, yeah.
Now you just do on Google Indian food near me, and then
Well, however you guys
it's
want to,
integrated in maps too. So
however you guys want to play it, if you guys want to consider a position in Yelp, right? If I could help you spot an entry, definitely a try at 40, and then if not 38. And if that breaks down, then it might want to go lower until like 35 and then at 30.
So the only place they're ahead of Google right now is because of the number of reviews they have got for everything.
Yeah, yeah, they have a lot of reviews already.
Yeah.
It's a first mover advantage.
And if anything, I mean, this price is pretty attractive. Like it's only trading at a price to book value of 3 and a PE of 25. Assuming that it's going to stay like this, but it's probably not 25 anymore for PE. But the balance sheet doesn't change much. It's trading about 3 times its balance sheet. Now, if you recall, how much did Salesforce acquire?
Right.
They bought about 19 times the balance sheet at 6.5 billion. Balance sheet is like all your assets minus all your liabilities, your net assets. So it's trading at a net asset multiple of 3. This one's trading at a net asset multiple about 19. So I'm just trying to gauge how willing are these enterprises to buy another enterprise, right? So this one, I don't know, it might be on a radar for some, but I'm seeing accumulation here. I might be wrong in the daily gap down, but I'm pretty confident in holding. Now, I don't recommend you trade the same way I do. You trade the way that works best for you, and you make the best decision for yourself. That's the best way for you to improve to become a better investor. I can only show you ideas. Take it as ideas. But at the end of the day, you gotta,
the gross margin is super impressive.
Yeah, the gross margin is super impressive.
Yeah.
It's so impressive.
It's all perfect.
It is. It's almost perfect. it's like wow. But they're trying. Look, they're high expense, right? Because look, if you're like at 20%, that means you're spending about 70% on like you're 70% expense on winning, on expanding your business. So that's okay, right? Because if you could win the long game, you keep 90%.
All the expenses in going and doing deals with these businesses and to get them on their platform. It's essentially a platform connecting the buyer and the seller.
It is. It is. That's why I'm really bullish this one, because it's a platform business model. It's not it is SaaS, but it's not pure SaaS. It's SaaS PaaS. Okay, it's a platform SaaS. Platform is the powerful
So it's
business
like
model
like
right now.
Amazon at a very local level.
I guess so.
Yeah. So that's Yelp. I won't allocate any more time to it, guys. It's a consideration. Again, trade at your own risk. All right. I'm just showing you ideas that I'm seeing in the markets. Another one, Akamai. This one I've been watching. The charts look really strong. They are in the web application firewall, enterprise level. I keep it here because I like the charts. I really, really like the charts, and I'll show you why. Check this out. Gap up, continue, and it's still hanging out at a higher level 70, and it never broke its 50-day moving average as of October. Once it crossed that 50-day, still holding that 50-day. I know it's very hard to see, but it's my orange line. Okay, I guess it did break, but it held. It's what I want to communicate. So if you want to play this, you could try 75 or the 50-day moving average. Play it as long as the stock continues to respect the moving average. I know we didn't review Bitcoin or cryptocurrencies, but we'll revisit later.
So from this chart, I would say if you bought closer to that when it was touching
Right here? What price?
Here, right here. Now I think it's time to sell, maybe.
Oh, because it's far away from the 50?
Yeah.
Yes, but it's showing a lot of strength. What I want to see next is setting up right here on the 50, basing right here at the 50, basing comfortably at the 50 for another breakout, right? Because when something bases, right, like you might get something like this. It'll spike up like this, right? And then all your RSI and stuff go to oversold level. But when it starts basing sideways, like the RSI starts like going down-ish, you know? Like right, well, not really right here. right here maybe. See let's see, gap up, and then RSI starts going down while it bases-ish.
Yeah, what I'm saying is that it might consolidate for a while, and
Yeah.
it doesn't seem that it will go even higher at this point. Do you think that is?
Yeah, I think it will. That's just the nature, like, seeing how the market performs. If we break out right here, especially all-time highs, the way I notice the market defines all-time highs, right? Highs that it's never touched before. The players will just keep buying it higher because we don't know how high it could go. Because they're insecure. I feel like the market, if I were to communicate to you at this point, I feel that the market is insecure about someone knows something that they don't know, and so they have to buy higher. So when stocks hit all-time highs, that's a very bullish indicator, and it's in like almost all the technical analysis books if you read them. I know it's weird, right? It's scary, but that's just how it is. Like a great example is Apple right now. We're already at all-time highs, and this thing is going to hit $1 trillion. It'd be nice to check out real estate prices in Cupertino, just to see how it performs, right? If they're talking about hiring more people, man, I think the people in Cupertino will love to hear all this. Just like we run a club there. So if I get my license, I think I should get Volatility club signs and just put it outside every Sunday or whatever day, and then people will drive by and like, ooh, investment club, right?
Pay you.
They what?
They're rich people. They're going to pay you.
Yeah, man. But all for the sake of education and something interesting to do, right? I hate to go sideways here, but like all these other things for me, like bowling, movies, and shopping, I get tired of it. I mean, it's just, I don't know, man. I guess I'm so into the whole consumption and production. And I know that if I'm going to go watch a movie, I'm consuming, and someone has to produce it for me to consume. And so I'm like, I'll take a step back, and these days I want to be more of a producer. Yeah, well, producer, or just make more friends who are interested, who wants to be on the other side. If you think about the evolution of life, right? We were born into a world. Now you could challenge me on this, but this is kind of how I'm viewing it. We're born into a world where, is it correct to draw this? We consume, and then over time, we'll consume until we're like maybe 30, and then 30 we get a job, and then we start to taper that consumption, right? And we're like, we become a minimalist, and then who knows, you might consume more sophisticatedly, or you might go down and start producing, right? Now because your net, let's say this chart is your net consumption or production, right? In your early days, your young days, right? Your net is more production. Your net equals P, production. Consumption, right? In the early days, and then as you mature, it becomes like zero-ish, right? Your net equals neutral, right? And then as you age, let's say you become like a Warren Buffett, you're like the ultimate producer at that point because your net becomes P, right?
It's a choice.
Yeah, so I think I'm just a little too geeky when it comes to economics, and I'm very aware how I spend. I don't know. I see things at a different level. I enjoy this more than going to the movies too much. Though I do like going to the movies. I still need to watch Avengers. So Akamai, web application, chart looks bullish. Let's move on to the next one, cyber. Anything that is enterprise infrastructure, I really appreciate. Cyber looks good. If it could clear the all new highs right here, that'd be great. But let's pull up the daily. What does the daily look like? Right, look at that. That is awesome. That looks beautiful. Let's put on advanced, and let me know if you guys start to see what I see. The bullishness of a chart, right? Gap up right here, right? Going higher right here, some patterns, right? Some patterns again. But really, we really gapped up higher, and 50 was really the dollar level. If you guys notice, I'm really just looking for the line in the sand. I'm not looking for your line in the sand. Everyone has their own line in the sand, but I kind of am looking for that objective line in the sand. And so it would fluctuate between these numbers really. So 55, 50. So 50 held, I'll take a position. If 50 breaks, I'll get out, right? I might combine 50 with like a moving average like 50. All All right, not no pun intended. $50 mark, 50-day moving average continues to hold, continue to be bullish. A little bit oversold, as you can see right here on the RSI on the daily level. But we'll have to see where it goes. But the chart looks good. If this thing could retrace down to 55, 55 would be a nice position entry objective. All right, that's what I'm looking at. Cybersecurity, if I recall, they are in that business model. CyberArk is what they're called. CyberArk software. You know, I'm joking about hosting these meetups in Cupertino. We do have this one guy in our group. His name is Neo Steve, or he introduced himself as Neo Steve. In my head, I keep thinking of Neo from the Matrix. So as of right now, I'm thinking Neo Steve looks something like this. Sorry, I just have to squeeze in that joke. Cyber. So what do they do? CyberArk is a security company focused on striking down targeted cyber threats before they affect business operations. So it looks like a biz ops software focus. Security company focused on targeting that. Okay, I won't go into much, but I encourage you guys to practice looking to Crunchbase. You don't need the paid version. I have the paid version. You don't need it. Just look at who funded them, right? Who are the investors? How aggressive and all that. So we got some over here. All right, some of the names right here: Goldman Sachs, Vertex Ventures, etc., etc. Crunchbase.com. That's what it is. So I like the charts on this. I like the business model. We got about 84% gross margin. This is why I like software, guys. We'll continue to watch this. Relatively small, $2 billion for the market that they're trying to take on, right? Enterprise level, $2 billion, trying to take on something else, something really big. What else? Baidu. This one's very choppy. It's still below 100 billion, and it's known as the Google of China. And they're doing heavy investments into AI the last time I checked. Now, I've been playing this for a while. I don't even want to recommend it if I were to recommend it, right? But I would educationally advise you guys that this one's very choppy, but I think it wants to go higher. It's only 93 billion, right? What is Google, like 700 billion? 700 billion and managing the internet for a population for the USA about 350 million, maybe 355 now.
Yeah. Hey guys, have a good Mother's Day. I'm gonna get going now. Thank you.
Yeah, see you, Tim. We got this in recording, so I'll pass it to you later. We'll talk soon, man.
Thanks, man. Thank you.
See ya.
And it's the top three of China, so Baidu, Tencent.
Yeah. And if you guys are gonna play China, guys, follow Asher, right? Asher is it's just a Shanghai ETF. You could do the Shanghai index, but I just used the ETF, same thing. We broke the 200-day, and it was looking kind of bearish for Chinese stocks for a little bit, but we're kind of going back in. So I'm still a bull on China, I'll tell you that.
So you generally track.
'Cause they already had their crash, huh?
Generally track on Shanghai or Hong Kong index?
Shanghai index, and then Hong Kong is Hang Seng index.
Which one you kind of?
You do both. Do both, yeah. And then you can even track the Singapore index if you want.
Which one?
Singapore?
Singapore.
Yeah.
Because
Yeah, they're a financial center too, but the main one is Japan. Nikkei index is more important. So if you guys notice in the beginning, I go around the world. It's really showing the most important indices around the world, right? Like, you know, Germany is huge, right? The last session we talked about the dollar and who's holding the dollar, Germany and stuff like that, Europe. So these are the major economies that we're looking at. I'm surprised in the currencies over here, they don't have the euro-dollar futures. We'll talk about that another time. But let's continue back to the stocks. So that's Baidu, right? If you're going to trade it, size down small, be patient with this one, extremely choppy, be careful is what I have to say for that one. But I have to play it because if it's really the Google of China, well, and especially with AI, right? At this point, little side note on AI, at this point, guys, what I notice is that enterprise now everyone loves software at this point, right? We love the applications on phones and stuff. What I noticed is the next evolution of software is AI. Like, they don't want I don't know if you notice in your workplace environment, but this is what I'm hearing around the VCs and stuff. They don't want just any software now. They're going to ask, is that software backed with AI?
Yeah.
right? We want AI apps. We don't want apps anymore.
I think in a few years everything will be
AI, yeah. So
4 or 5 years.
So this is a hot investment opportunity. Sadly, I don't have my own venture capital fund to go out and source entrepreneurs to throw money at them, to help them boost their dreams.
But in terms of timing, you're perfectly timed. If you want to get into AI, it's
Yeah,
like
yeah.
in 2007 you want to get into mobile space.
Yeah.
That's the
Yeah.
timing opportunity.
Yeah.
AI is starting, like it just started, I guess.
No, it's like validated that it's gonna go. It's not no more like experimental.
Yeah.
Just like self-driving cars.
So next 10 years is gonna be huge.
Hey JC, we'll try to review this at the end, or I'll have to post it into the chat because I might not have time to get through everything. Because I know JC wants to share this, so I'll leave it in the chat for you guys. So what was I going to share? Post an activity. The whole AI stuff, right? I saw an AI image recently that I liked, and I shared it on LinkedIn. Let's see. Come on. Internet lag. Okay, while that loads, we were just talking about AI. So yes, it does look like people are demanding AI apps, intelligent apps at this point. That's a big trend. Here we go. This is the picture I wanted to show. So how can we as investors get exposure to AI and whoever is investing in AI, right? I just thought this would be interesting. Microsoft, Amazon, Apple, Facebook, IBM. If all the major players are looking into AI, look, these guys are big, giant companies. If they don't eat the next big market, then a small startup will, right? And if a small startup does it, then, it's competition. Huh? Yeah, they all have to do it, no matter what. If they do it, I think we gotta do it too.
Miss this bus.
Huh?
None of them is gonna miss this bus.
Yeah.
Exactly.
Yeah, they don't want to miss this bus. So like I said, I know oil was like super hot, right? GE was at one point was like top 10 in the world, if I recall, top 10 biggest companies. But now the game's changed. It's data. It's data AI.
GE will come back from
Like,
this point. It has hit the rock bottom.
If GE could go really GE digital, I'll show you this. GE, $1 billion startup. What was it? Let's see. The next billion startup. Teaching. No. There's a funny headline. Never mind.
I mean, like they still make the engines for the airplanes.
Yes.
Kind of like in a monopoly there.
Yes, but
So aviation grows, the demand will grow.
Yeah, so as we progress in this whole software race, right? Data and it's so big. GE is trying to be the best player in the industrial segment. Because at this point, I think we're very aware that every sector needs AI. Healthcare needs AI. But tech needs AI.
But let's say to fly a plane, you still need an engine, and that's not.
Physical engines.
So infrastructure, like
Yeah.
industrials, is still gonna be there. We can't say
Yeah.
that AI will replace the industrials.
Yeah. Well, it's a race. I don't know how this is going to play out, but you got to bet your money where the game's going to change. It's so fun. It's really exciting too. But for us investors to get access to a public AI investor, big investor, something to consider. Facebook, IBM, these are the tech all-stars right here, guys. Let's move on. So Twitter. Twitter's pretty low, relatively low. If you're going to play this, I don't know if it could go any lower. TWTR. Reason why is we got a president who's using Twitter, and it's very integrated into our social economy. If you think about it, everywhere it's like tweet this, tweet that, and like similar to Yelp, right? Get all that excitement out, let that legendary war happen, right? And then when nobody wants it, that's when K starts looking. That's the best time. So 20 held, 30 held, and it looks like we're setting up right here. I think this is a okay opportunity. 24 billion, a little pricey.
I think that this is gonna explode with M2M communication from machine to machine, and like a machine is not tweeting, it's not just humans tweeting. That's what their next level of intelligence is gonna happen.
Yeah, like okay. So my kind of take on this is like I don't know about aggressive.
I still don't know how they make money out of that.
Advertisements on their. We got to sit on an earnings call, but basically I don't see a aggressive growth story for Twitter, but I don't see Twitter disappearing.
Is there any competition? No, right?
I don't think. Well, other social
Facebook
media
is kind
platforms.
of competition.
Yeah, but you know, like I said, guys, again with the pyramid, if we're going to become great investors, right? We're going to do Twitter. Right? We're looking at the bottom cash flow, right? We need to look at the top cash flow. Though Twitter does get money from top cash flow if they want to. Like Amazon wants to advertise to this cash flow, right? Like Facebook is definitely over here. So it's a mix of both, I'd say. But let's continue to monitor. Maybe there is an aggressive growth story for Twitter, but I don't see. Basically, what I'm saying is I don't see Twitter disappearing. And if Twitter's not going to disappear in this new digital infrastructure that we all have, I don't see it going to zero. That's just the logic on that. But I don't have an aggressive growth story to tell you that it's going to go to the moon, right? But I'm pretty sure it's not going to go away. Unless Trump decides to use like Facebook more. Just kidding.
The problem with Twitter is that they are not adding that much
Advertisement.
members.
Yeah.
The membership is not growing like.
Oh really?
I haven't looked at their earnings in a while. I thought.
I don't understand
Let-
like what's the.
Let's try to circle. Let's try to circle back to this.
I mean, to me, it seems like more noise. I think it's like
Yeah,
that news
exactly.
in Facebook.
Yeah.
So
Okay.
it's like too much noise.
So Disney, guys, move on to Disney. This one has now we had a value stock session. I told you guys, to me, this is relatively, there's value here in an expensive market. It's cheap in an expensive market. It's a little bit, it's not as expensive. It's cheaper than, okay, I'm not gonna play with the words anymore. But basically, I'm seeing a ton of support for this one around the 90 and the 100. There is a ton of support for like about it. How many years is this, right? We have the monthly, by the way. We got the monthly.
They are going ahead.
That's support right there. A ton of support right here, right? So as investors, if you understand risk reward, there is so much. This is your risk, and your potential reward is something like that, right? If we could get a 4-to-1 risk reward or whatever, 5-to-1, 100-to-1.
And they are
This is the risk that I see for Disney right here. So it looks attractive, but timing on appreciation, I don't know. It could be a little bit longer term hold. This is a mid to long term hold.
and they're going heads on against Netflix, so putting a lot of money into
Yeah.
their own streaming.
And I look at this robust EPS and sales. That's attractive, you know. If it goes down more, we get a 2% dividend. Man, you get 2% dividend on Disney and appreciation. This looks attractive. So
Fees also.
I wouldn't get insecure about the little moves, but I mean, regardless, you always have to have risk management, right? Warren Buffett took a position in IBM at 170 and now it's at 140, and he's like exiting his position, right? He has risk management principles too. So you can never pick a stock and think like it's going to keep going up, or if it goes down against you a lot, you gotta at some point have a plan, get in and out. So that's what I'm seeing between the 90 and 100 for Disney, and we just happen to be at the 100, and we're seeing a lot of hammers, and they're weekly hammers, right? Okay, well let's see how this one plays out. We did have this negative one here, but I think this one's gonna be stuck in a range for some time. If it clears 120, higher we go, because all-time highs. Next one, Netapp. This one's gaining a lot of momentum, at least from the chart, and so I mean, they're competing with like Dell, EMC, and stuff. I just like the chart. I haven't looked deeply at the financials. I like the shares outstanding reducing, right? But the chart looks very awesome. The 100-day is still holding. So this looks like a comfortable ride for the lower risk tolerance investor or trader. Less of a bumpy ride.
Go down to the back.
Go down to what?
No,
Yeah.
just looking at
Yeah, gross margin 62, multiple on the books is about 9, multiple on the sales about 3, multiple on earnings about 23.
it's almost 100% institutionally owned. Very few for the retailer.
Yeah, and this information, guys, updates every Monday. If you could go to the help section, it'll tell you it updates every Monday. So that's Netapp. Nothing much to say. I think we should do a deeper analysis. What you could do is just do a segment analysis, right? Pull up all the data storage players in technology, and the biggest one is Western Digital. Number 2 is Netapp. So if you can't afford Western Digital, can you afford Netapp? And then they got the other ones like Pure Storage. I used to work here, financial analyst. But
And Pure Storage?
yeah, I used to work there. Let's see. Okay, moving on to the next one. That's Netapp AAOI. I know this one's Raj's favorite. They are responsible for the wires in data centers. Raj has more of a technical background on this. Huh?
Started picking
Yeah, it's starting to pick up, and that's why I wanted to put it in here. But guys, this is a bottom picker, right? It's different from like Silicon Valley Bank. Silicon Valley Bank wants to go higher. This one is gonna fight. You're gonna fight. You're gonna have a battle before it goes to the moon, like cryptocurrencies, right? Cryptocurrencies, we're in another battle. I got stopped out at 750. 750 somewhere right here, stopped out. Let me go to the hourly. 750. I tried right here. Right, I stopped out somewhere here, got back in because I thought 750 was holding. 750 broke. I stopped out, haven't got back in since. So it looks like it's retracing. I was gonna get back in at 650, but I didn't pull the trigger. I'll be patient with this one. But I don't know if you guys heard the recent news. Facebook is introducing a blockchain group that is critical, right? Why is that critical? Facebook is one of the top companies in the world. If you look at the biggest companies out there, we got Apple at number 1 and Facebook at number 6. So, however Facebook decides to deploy their resources, if they're going to deploy a team of blockchain engineers or whatever, they're going to spend money on paying an executive $200K to develop the blockchain app. Well, I think Facebook is a lot more intelligent than me, and I would take that pretty seriously. So cryptocurrencies is still on my radar. Anyways, AAOI, they do data center wires. Raj is a big fan of them. I don't know the technical aspect of it, but I do have the financial aspect in sight. They're trading about a 1.85 multiple on their balance sheet, which is attractive in this market, right? And they got a PE of 9.34. They're positive in earnings, and it's a data center play, and I think the leadership is Chinese. No, I mean, that's not a joke or anything, but it's different. I just point that out.
And most of these companies are based in Taiwan. These kind of optoelectronics.
Why is what?
Most of these optical based companies are based in Taiwan.
Okay, I see.
Even the AUO.
Yeah. So I know they decline on like litigation issue or whatever. I gotta circle back to that and recall why. But if you're gonna play it, I say check out that reason and see if there's nothing fraudulent or nothing big, right? If let's say if they're getting sued, class action for $1 billion, well, shoot, go to.
Small company.
Yeah, it's a small company. Let's say if they get sued and you're like, oh, I wonder how much cash they have. Can they service the people suing them, right? You go to their balance sheet and they got the total net assets of total equity all the way down right here. They got about what's the latest? 2003. Okay. They have about 300 million. Right. So if they're getting sued for $1 billion, then you'd be cautious of that.
Can you look at the AUO, which is in a similar space?
The AUL?
AUO.
AUL. Not sure. But yeah, worth a revisit to these right here. IPGP guys, right? This one's setting up on the monthly. Looks good on monthly, not bad, right? And then we got ASML, right? Even after all this, the crisis that we had in trading in February, bam, up, still managed to hold the 100 MA, ASML, right? Gross margin 45, very profitable company. So learn to spot these profitable ones, especially when the shares are reducing, right? It could be buybacks or whatever. It could be buybacks, it could be hedge funds buying it, mutual funds buying it, or more retail investors buying it. Right? Or even SMBs buying it. SMBs can invest too, don't forget. So that's ASML. Let's see what else. VMware, recovering very well. I have positions in this. I added more this week. I was trading it. I caught that $5 move. I was pretty proud of myself. This move right here. Yeah, so I'm playing this recovery. Nice company. I think at this point, VMware is like a pretty accepted company in the enterprise space. I like VMware. I think this is a very, this is a nice stock for investors who are low risk tolerance. Like if you want a cruising security, I think this one might cruise after this volatile event. The whole mergers and acquisition between Dell, right? So if you want to play the other one, DVMT, trade ideas, guys. So that's looking good. Shoot, we're almost getting at the end of the hour right there. So EA, new all-time highs. EA looks good, guys. Breakout to new all-time highs. I won't show the charts. Tech All-Stars. Actually, you know what? I will have to send you guys this document, right? I do have the All-Stars that I really like. These are like Gartner leaders and very powerful securities, especially Splunk. I think I could get really rich off of this one if I start betting bigger on it. Red Hat, I need to perform more research on this. And of course, the majors are here, all right? Google, I'm sorry guys, I'm skipping ahead because I'm running out of time. We'll jump deeper into it maybe next week, or I'll try to do a teaching session next week. Or if you guys want to do more stocks, we can. Short, Roku, I'm still watching, but it's retracing. Spotify, right? I might be wrong. I might be right on the earnings, but wrong on this move as of most recent. It's retracing pretty hard. I got stopped out. Just because that's how I play. I don't, you know, it gapped down really hard from the earnings, right? So to me, this is bearish, but like any other IPO, it's still war. The war hasn't occurred yet. So I'm not going to pick up shares. I'm still viewing as a short, but what I like to see next is some breakdown at the 150.
All the news are very positive.
Exactly. It's so positive that it's getting people's emotions and it's hyping it up. If you look at that one-day run, right, this $10 move, I think 150 to 160, right there, that $10 move in one day, the next day it just went down. So I think this stock right here, Spotify, really did capture the attention of like the very newbie investor, in my opinion. The investors who emotions get really pushed. Their buttons get pushed and they're like, oh, we gotta buy it, get in. But financially, I don't know, man. Financially, I'm not really attracted to it. If sales continue to grow, right, like 25% higher, then I have to say, you know, I have to bet the other direction. But as of now, nothing indicating that it'll go up higher, except for as of most recent, it's having resistance at 160. So if you want to try and play this on the put side, this is more advanced, educational only, all right, guys? It's pretty choppy. I'm going to probably look for a reposition in to bet down on this. So I'm still bearish on it. It's just the emotion of the investors could bring it up really high, like GoPro. If you guys remember GoPro in the past, I remember, you know, it doesn't have the, well, actually it does. It's both the weekly. The emotions of investors who carry this to like $100. Oh wow, it doesn't happen. GoPro up to $100 and then all the way down. So war, and then I'm not gonna pick these up though.
Still going down.
Yeah, I don't know. I'm not attracted to their gross margins, and it's a physical. Yeah, in this world today, with software eating the world, you got to be a software player, in my opinion. Okay, all right. So Spotify, Roku. Right, that's what I'm looking at. Reits. I want to point this out before we go. I was doing some analysis on Reits, and what I discovered was going to the Reits industry. I was looking at the office space. Can you guys tell me who is the leader in? Give me a Reit type of. What's the hottest development right now in the office space?
WeWork?
Huh?
WeWork?
VWork? No, not a company, but what type of category? Like collaboration offices, mixed commercial.
Mixed use.
Right? Yeah, you'd be surprised. The number one, or the biggest one that the public market has discovered, is digital realty, data centers. So data center real estate is super hot right now. At least the market is saying so. And I think there are multiple ones up there. Equinox is one, but I think they do other things too. Have you guys heard of Equinox? There you go. Oh, Equinix, I'm sorry. Anyone heard of this company? No? Okay. I think they're in the data center space as well. So guys, we're not just Facebook, Microsoft, Netflix investors. We could also be data center, commercial, real estate investors. It's just we got to get into these markets. Well, I mean, at this point, there's no need to rush. You know, get excited, too excited. It's nice to get excited, but I think if you're an intelligent investor, you will always find opportunities. So.
But is this like buying a data center or reality business more like the mall business?
No, because people don't go. Data centers are bought by
I know
enterprises.
it's not a like 1:1 comparison, but more like how do you make money out of it? Yeah.
Apple will pay you.
Also, you are saying
Facebook will pay you.
I offer the space for building a data center instead of Apple buying.
Yeah. Okay, guys. So I'm hitting my 12 o'clock mark, but I really want to go over this real quick. I had a quick video on robotics, but won't go over that. I want to show you before you guys go. Happy Mother's Day to everyone. Take your mom to the Apple Cafe. It's really cool. I might go there
We
later.
can cover this last portion again next time.
Okay. Yeah.
It's
Yeah.
interesting.
Why Apple Cafe?
Huh?
Why Apple Cafe?
Oh, I just thought it was nice and I put it in there because I've been going there a lot.
He's getting paid
Oh,
Apple
that-
Cafe to promote.
Yeah, so let me show you this $30,000 software. It's well known in the enterprise B2B space. I've been selling in B2B for probably more than 2 years now. It's used to discover, oh shoot, they're texting me already. It's used to get leads. They're a lead broker, right? If I need to call an executive, how do I find them? So let's go Arista Networks, right? And you know, I use this at work, right? But I'm also using it for other things, investment purposes, right? So if I want to pull up an executive, whatever level, right, and call out, let's say to the CIO, I have his direct contact and email, and I'll try to push him to buy our software or whatever. Not really push, but just asking. Sales is really asking. I think there's too much of a stereotype that salespeople are pushy, maybe to a certain extent. But I think the bad salespeople are the ones that don't know how to target. But if you're selling a solution that the CIO really needs, then he will always give you time to listen. He or she will always give you time to listen. So I wanted to show you guys this, the technology part, because I think they did a good job in structuring the type of tech out there, right? Global Robotics and AI ETF. We gotta check this one out another time, JC. I'm running out of time. Hardware operating system environment, networking companies, right? What do we got out there? Aruba Networks, something we could think about investing in, right? What I could do is pull up a bigger company maybe and see what tech stack they're using. Because let's say if Amazon's using Arista Networks, then we know Arista Networks is getting paid. Something like that. Let's see. So some popular database technology, MongoDB, right? Maybe we should consider MDB, something to invest in.
It recently at the IPO.
Huh?
No, only November it had the IPO.
What do you mean?
The MongoDB.
They're not.
Oh, they went to IPO recently.
Yeah. Oh shoot, where'd it go? Right here. Let's see, database technology, cybersecurity. Does that look familiar? Palo Alto Networks. All right, virtualization, VMware. Is that a great company, guys? AWS maybe, or Amazon Relational Database. Oh, right here, AWS. Right. Apple iCloud. I didn't know that. What else? CRM, Salesforce. Right? I'm super bullish on Salesforce. Look at this, servers, Akamai. We were just talking about Akamai, AKAM. What else? Zendesk, Apache, Business Intelligence, Tableau. That one's public. Ticker symbol data. Splunk, right? So we know who's getting paid. So whatever top companies like Facebook, we want to explore their tech stack, right? Oh wait, it's Facebook, not FB. Facebook. Look at their tech stack, call their executives, and get some deals. Keep in mind, guys, if you guys want to talk about business development, starting a startup, how can we as a group start a little tiny startup, create some software, sell it to the CIO? If you guys have that knowledge, well, I have the go-to-market knowledge. I could source the people to sell it to, but that's another talk. That's more entrepreneurial. Let's see, this is the tech stack at Facebook. Anything you guys want to look at real quick before we clock out, like what they use for their enterprise application, their networking. I think you're into networking maybe? Not so much? No? Data storage, Amazon cloud storage, right? Who is Facebook paying? Pure Storage. If Facebook is going to use Pure Storage, hey, that's something to consider. Pure Storage is a publicly traded company. We were just looking at it. I can't believe they're using violent memory. Wow, I'm shocked. Let's see what else. Databases, Couchbase. Hey, used to work there too. Security, FireEye. Right? Great ways to get ideas of investment, but not only that, I love the fact that they structured out the categories of tech. So moving forward, I know you probably won't like it, but I'm still going to focus more on tech. Just because I feel that tech, data, software, all that is like the major trend, the whole, you know, the data, the oil craze of like the previous generation. Now it's tech. I think.
But tech needs energy to run.
Yeah. Okay. All right. You got me there. Renewable energy and all that. Something that working at GE taught me is, you know, it gave me the idea that one of these days, if I ever make it big, I gotta buy one of these. I gotta buy myself some land, and then I gotta buy myself a wind turbine. If I can show you this video real quick, it's pretty cool. What? Okay, let me see. We'll end it with this video. So this is Jeff Bezos. A really interesting guy, huh? Let's see if I can get the video to play real quick. Oh,
Yeah,
no.
a lot of people are complaining about the design of the wind turbine. They're killing a lot of birds.
Killing a lot of birds. I saw it on the. Yep, that's his almighty wind turbine farm. This is what GE taught me, you know. And like, can you imagine investors buy this and they make money on wind?
So that's what I'm saying.
Make money on
Amazon,
water.
Facebook,
Yeah.
Google are investing on energy
Yeah.
because electricity is on what the data centers run.
Yeah,
They need
yeah.
energy.
Yeah. Okay, so guys, lots to talk about. I hope you guys found this discussion interesting. We went back to stocks like usual. Something that we haven't discussed in a while. Let's see what we could do next week.
Some of this we can continue next
Yeah,
week.
we'll continue next week. We'll talk. I actually want to explore the commercial real estate data center stuff too. But yeah, we'll end it here, guys. I gotta go to a Mother's Day thing. Happy Mother's Day, and thanks for joining like usual.
So when
Catch you guys next time. Thanks, Shati.
Okay,
so when would
thanks,
we
Kay.
be moving to the
Welcome. Thank you. Thank you, Liz. Thank you, Neo Steve from the Matrix. We'll meet one day. Okay, peace out, guys. I'm gonna close it.
So when would you be moving to that location?